Cloud. What's up, everyone? I got Darran Anthony here, President, EVP, I believe, right, of Main Street Home Loans, joining us today. Thank you so much for being here, Darran.
Yeah, buddy. Thank you. I'm happy to be here.
Awesome. Darren and I go way back. We were just catching up on some old trips about 10 plus years ago. So it's good to reconnect, Darren. I want to hear, how things are at Main Street, but I want to start for our group that doesn't know Darren as well as I do. How did you start in this business? How'd you get in?
It's amazing. So right after I graduated from college, I was a finance major, and I wanted to get into building. I wanted to work for like a builder or a developer and something like that. Unfortunately, the year I graduated college, pretty much every builder, the only people making money in that industry were bankruptcy attorneys.
Mm,
So it wasn't a great time to start into that side of it. And my fifth year in college, it took me 5 years to graduate. I was an
Dr. Darren.
assistant. I was an assistant wrestling coach at George Mason, and one of the women that, or one of the guys on my team's mom owned a small broker shop in Great Falls. So I kind of went to work for her for a little while. I was an in-house processor, and then I originated refinances because it was kind of a refinance market. So I kind of did a dual role, and I thought I would just do that for a couple years. And it turned into a 31-year career now. So
Yeah.
that's how I got started. I was there for about a year and a half, and I realized that the broker world probably wasn't the way to go. And I wanted to buy a house. I had a new baby. I had just gotten married and had a baby. So I took a job with Waterfield Financial, basically being a processor. So that's how I started in the industry as a processor.
Do you feel like your, upbringing as a processor gave you unique insight kind of into what happens once you bring a loan in?
I definitely think so. I mean, I started as a processor and then I went into kind of like a decisioned underwriter where I could
Hmm.
actually underwrite the loans too. And you got to remember, this is back when, I mean, we didn't even have voicemail yet. All the packages were done by hand. You had to do your own truth in lending in good faith by hand. And it was white, yellow, and pink papers, and you would rip it off and give it to the client and keep a copy for your own file. So, yeah, you really had to learn the industry and know the numbers and everything and the guidelines and rules to get a loan through back then.
Yeah, I've always found like a lot of these top producers like yourself, they have a great understanding of all parts, right? You're not just siloed into this origination. I just go out there and meet with realtors. I originate business. It's like, no, no, no. You got to know a little bit about taxes, financial planning, right? What the underwriter's thinking, what the closer needs to do, title. Like, if you're not the jack of all trades and knowing enough to be dangerous and everything, you're just really a dialing for dollars guy.
Yeah, I mean, it's 100% your job. There's very few sales jobs where you're the beginning and end to all of it, right? So you have to know, if you're in software sales, like you have the engineer that's helping you out, right, on the
Mhm.
backside of implementing it. But we have to know every aspect of the business to be able to make sure that that's a loan that can go through.
Sure.
So knowing the guidelines and the rules, knowing the tax laws, knowing all of that definitely gives you a big hand up.
Yeah.
The fastest way to lose business is to mess up a deal, right? Because you do a great job on a loan and an agent will maybe tell one or two people. You don't
Sure.
close a loan and you mess something up, they're going to tell everyone.
It's
So
true.
reputation's really important. To me, it always has been. That's my claim to fame is I've never taken in a loan that I've written an approval letter on and not had a loan close in
That's a
31
lot of loans
years.
right there.
That is a lot of loans. Yes.
Yeah, the old adage was it bad news travels 10 times faster than good news. I believe that's right there.
That is true for sure in our industry. Yep.
So you've been doing this, what you say, 31 years now? Is that right? Something like
Yeah, it started in 94, I guess. So yeah, technically 32 years now,
that?
almost.
Okay. So you started in the processing side, then you started doing some underwriting. When did you start originating?
So that's a good question. I was trying to think about this. So I probably processed for just a little over 2 years.
Okay.
And then I decided the market changed pretty quick.
Hmm.
And refis went away, and there was a lot of people in my office getting laid off. And I
Sure.
really looked at it and said, man, I think I'm on the wrong side of this business, at least for me.
Right.
Um, so I actually interviewed and almost took a job as a private mortgage insurance rep.
Hmm.
So I interviewed them, but one of the loan officers that I worked with was like, man, you really got to get into the sales side of this. We think you'd be great. Like, all the rules, all of this. But Waterfield as a company wouldn't hire me as an originator. They were worried that if somebody moved over from ops to sales, that everybody would want to do it. So I actually
Interesting.
left and went to go work for a small company called Douglas and Edelman Mortgage, which is,
Oh, wow. The
Rick
broker out of New
Edelman.
York?
No, Rick Edelman, who's the financial planner,
Oh, okay.
him and Jeff Douglas had like a broker shop based in Fairfax that did a lot of his
Oh,
clients. So
gotcha.
I went over there and I was there for about probably about a year. And then Waterfield, my old boss, got promoted, and one of the loan officers took over as branch manager, and he brought me back.
Gotcha.
So his first thing as manager was he hired me as an LO.
And at some point, you made your way, if I remember correct, to National City, right?
Yeah, so Waterfield was going through a transition where the owner of it for a long time was basically selling it out. Um, and our whole branch moved as a group. So
Gotcha.
our whole branch left Waterfield and we went over to Nat City as a group.
Okay. And you were at, so obviously a ton of old National City guys I worked with, we worked together. And what was the year? I remember there was a year you were number one in that city. What year was that?
Yeah, that was my biggest mistake ever.
Tell me about that.
So, so, so I think I was number two for like 7 or 8 years in a row. And obviously, I think you interviewed Lenny Gordon. So Lenny Gordon beat me every year. And it was an amazing fact that he was number one for so long that everybody wanted him to go down. Right? It's just normal. It's like the Patriots, right? If you're number one for
Yeah.
so long. So then when I finally beat him, nobody wanted to help me anymore. So I was like, man, that was a big mistake. Like I should have never did that. My life
Everyone
would
loves
have
the
been a lot
underdog
easier.
until they're on top.
Yes. Yep. So I can't remember what year it was. It was probably somewhere between like 2000 and 2004, maybe somewhere in there.
Okay. So you're National City for a while, then you make your way. Did you go to, wait, was first time right after that, or was there a stop between?
There was a stop between. So I was at Nat City, and still to this day, Nat City was an amazing place to work. I mean, they did just about everything right. Um, but we went on a managers meeting, and I was just listening to it, and Malcolm Holmsteiner we all met up as a group with Mike Twig and everybody afterwards. And I kind of just asked him, I was like, did I hear it right? Are we out of money? Um, so it was when the housing crunch was coming. They had bought a couple banks in Florida that didn't go well with construction loans, and we had a lot of second mortgages based on payment option arms. So the bank was really going through some transitional changes, and there was a good chance that the bank actually might fail. Um, so we met with a group, and our whole branch left, and we went to SunTrust. So again, we took over probably about 20 originators left and went over to SunTrust.
Gotcha. You're SunTrust for a while. You make your way your first home for a while, and then you start Main Street. How long have you been at Main Street?
So Main Street, we're coming up on 7 years.
Wow. Okay.
So yeah, and obviously Main Street is a DBA, so it's not
Mhm.
it's not an actual its own company. Even when we were in Nat City, I wasn't Nat City. We were actually First of America, a division of National City. So we're right now Main Street, a division of NFM Lending.
Yeah.
So we're a DBA of a much bigger company, but I kind of like that model. I mean, I liked it in Nat City because we were so big in Nat City. I mean there was probably 7 or 8 branches of Nat City within, you know, a couple miles of my office back then.
Sure.
So to have a different, to be able to have something that differentiates you a little bit from that Was
Yeah.
nice. So if people are like, I never heard of First of America, I'm like, well, I'm actually Nat City. But if somebody didn't like Nat City, I'd say, well, I'm First of America.
Best of
Um,
both worlds.
yeah, best of both worlds. So I've always liked that model. And that's kind of, with the partners that I have when we started Main Street, that's kind of the same thought process that we had. Everything that the reputation that we have is what we built, not what somebody else built. So it
Sure.
just seemed like a good way to go about it.
So I think it's very unique. As the president, you're still one of the top originators. How are you able to juggle that?
That's an interesting question. So, I think from the standpoint of, you know, I probably do the 80/20 rule right now. So I spend about 20% of my time originating and
Hmm.
about 80% of my time managing and dealing with the other parts of the business. I've been originating for so long and seen so many loans that I can pretty much diagnose a loan pretty quickly. So I don't
Sure.
have to spend a whole lot of time in it. I have a great assistant. My son Nick works with me on my team. So when a loan first comes in, he sets it all up. He goes through it. He picks what he thinks is going to be the best product for them. So by the time it gets to my desk, pretty much everything's been done.
Sure.
And then I just have to look at it real quick and then call the clients and say, hey, this is the way I think you should go, or this was what makes the most sense, I think, and have a discussion with them. But it's cut out all the other minutia from my life of dealing with the clients. And then he deals with the backside of it with collecting the conditions and anything else that would be a problem with the loan. So he handles almost all of that for me.
Okay. So working with your son, right? So you've been doing this 30 years. What's it like seeing the lending world through the younger generation, right? What do you look back and think of yourself in your 20s as a processor and first starting out, and then you look at your son? What's different and what is timeless in your view?
So it's interesting. So I just thought about this, right? Because this is the whole big thing with AI and the onset of all this. And we talk about how much easier we think our jobs are going to get. And if you look at the amount of technology, when I first, was doing, and I think the one year with one assistant at Nat City, I think the biggest year I did just under 2,000 loans in a year. Um,
Wow.
and that was back when we had to print the packages and you would highlight where they had the sign. And then I would fill out one FedEx envelope and a return FedEx envelope, and you'd have to mail it to them. And then they would send the documents back. Um, but somehow, with all this technology that we have to make everything easier, I think it's harder today to close a loan than it's probably ever been that I've been in the industry. I couldn't even imagine closing 70 or 80 units a month now. There's just too much that goes into it. So I think with all the technology we get, it finds a lot more stuff than it used to, right? So we end up collecting a lot more documents than we ever have in the past, even though everything is supposed to be simpler and easier. I just don't feel
Interesting.
like it has been.
I can only imagine what your paper bill was in your P&L when you're closing 2,000 units and you got that tri-print paper. Georgia Pacific must have been having a record year then, whatever it
Oh, and
was.
FedEx for that matter.
Yeah.
I mean, think
Oh,
about that. That's two packages on every load at a minimum.
oh my God. Uh, wow. I mean, I can't even comprehend 2,000 units. Just the amount of that. To your point, like with, DU and LP and all this automation, you would think it's simpler, but how many times has an underwriter, asked for something that's not in the findings, or you get a post-closing condition on something that's not in the investor's guides? It's like, what are we doing here? Like these people have 800 credit scores, DTI is 22, they're putting 30% down, and we're worried about this, potential $30 a month Best Buy card. Like what's happening here?
It is interesting, right? So in the new role that I took on with originating, I've learned a lot more about just the whole business in general, right? And the secondary side and the way loans are priced and the way loans are purchased and securitized. And as an industry, I think we've kind of lost our way a little bit.
Hmm.
We really care about the quality of the documentation, not the quality of the loan. So, we have a lot of loans that seem like they would be that I would want to lend my money to, that you have a harder time getting. And there's other loans where you're like, I wouldn't lend that person money. And those loans fly through without a problem. So, our
Yeah.
industry isn't really great at assessing risk. Um, and I don't think
Yeah.
it ever has been.
That makes me think we were talking about a couple weeks ago non-QM, right? And how, I don't know, you go back 5, 10 years, the non-QM stuff, my personal opinion is kind of like, it's kind of like repackaged subprime. But then today it's like, wow, these are great products.
Yeah,
These are things that really, like to your point, I would lend my own money to these borrowers, right? It's just they don't meet the Fannie Freddie narrow box of scope, but instead it's high net worth people. It could be job change, it could be limited documentation, whatever it is. Bank statement loans that are just common sense.
exactly. If you have somebody that believes that they go from a salary position to a 1099, they're not doing that because they think they're going to make less money, right? They're doing it
Correct.
because they think they're going to make more money and they think they have enough in reserves to cover it. Yet, I mean, that was the old thing when Ben Bernanke left being the Fed chairman and then he went to be self-employed and he got what, $120,000 a speech and he couldn't
Right.
get a loan. Said he didn't
Yeah.
qualify, right? None under a Fannie Freddie anyway, because he's newly self-employed. So yeah, these loans definitely make sense. And a lot of the hedge funds that have stepped in and done them have put really good guidelines behind them that I think they're going to perform well.
And also, I think that given that rates have increased, there's a little bit more margin. That when rates are 2.5, 3%, I don't think the hedge funds have the appetite for this. But when rates are in the sixes, sevens, I think they get up there and they're like, oh yeah, this is worthwhile. The 10 years at X. So it makes sense for them to kind of open up the credit box here.
Absolutely. Yep. And definitely common sense loans.
Yeah, I mean, I like that line of like, the industry is really good at documenting, not really, worried about the quality of the borrower. It's true. All right, so going back to, your role as president, you said the 80/20 rule, right? 80% of, managing. What do you think your biggest strength is as a manager?
Mean, obviously, my knowledge of the whole industry. So
Hmm.
I'm a numbers guy. I've always been a
Sure.
numbers guy. I've never really thought of myself as a salesperson, right? I mean, I'm not the guy that's going to go to an event, sit in front of a bunch of agents and be like, oh, I have to use him. That's never been my way of getting business. My way of getting business has been, I know the answers to most people's questions and they know that I'm going to do the loans correct and they're going to go to closing and they're going to get, a really good deal and structured correctly. So obviously that for the being able to help loan officers structure deals, get things through. Also assessing the risk for the company. That's one of my big roles is making sure that if we are, one of the big things in our industry is we use the word guidelines, right? A lot of the times. And it's guidelines for a reason. It doesn't say rules, right? It says guidelines, right? And most of our industry where all of the main people make mistakes is in that gray area between what
Sure.
is a rule and what isn't a rule.
Right.
And I think that's one of my biggest strengths is knowing what the agencies will and won't accept and helping somebody structure a loan. Because a lot of times people get so engrossed in their own loans that they don't
Sure.
see that there's an easy solution to it, right? Put less money down and pay off debts, right?
Right.
Or, something similar to that. So, just being able to see that for people. But then the fact that I'm really good with the numbers too, of letting people know, this is how much we have in a loan. We have to make a little bit of profit, right? Or we're not here anymore. But being able to look at the whole overall and set pricing and rules for everybody.
I like that. And knowing you and your group, I would say your group is very tight knit and you've been together, a lot of your team for a very long time. How do you focus on, retention and, building this culture of loyalty and, you guys sticking together through multiple stops? Is there anything you actively do to kind of keep that engagement?
Yeah, we can give a quick example. So Matt Pren,
Hmm.
we've been together for 32 years now.
Wow.
Um, I was his processor. Uh, I was his processor early on in the business, right before I went into the sales side of it and did everything. I think if you treat people with respect, and you give them a platform where they can be successful, that's mainly what they're looking for. And if you take as a manager, you take other people's problems before your own, and you're not competing with your own salespeople, and
Sure.
you always have their best interest at heart, it'll go really well. I've only been at a few companies. I mean, it sounds like a lot, but if you go Waterfield, National City, SunTrust, First Home, and NFM now, it's 5 companies in 31 years. Um,
Right.
I don't move around a lot,
Sure.
but I've learned a lot at some of the stops that I've had. I've learned the people that I don't want to work for. And that's a big one. And I've learned too at some companies, whether you give them really good ideas or not, they're so set in their ways that there's certain things you can never change.
Right.
So culture is one of them normally. I mean, if a company has a bad culture, you can bring in really good people and try to change that, and it's not going to happen. And you really want to work somewhere where people listen to your ideas. And we always say at our company, like it was started by originators for originators.
Yeah.
But that's not even really true, right? Because every single processor, closer, marketing person at our company has a voice. If anybody comes up with a better idea or a quicker way to do something, we implement it almost right away. So you're not going to sit around and say, "Oh, I got to go to a committee to do this." No, if somebody comes in with a great idea, especially if they're from another company and they come in and they do something better than we did, why would we wait? Like do that
Right.
instantly. Um, so I think if you do things like that, you're going to be a successful company. It's definitely not rocket science.
I love it when, the answer is like, well, we've always done it this way.
Yeah.
Why? Like, just because you've always done something one way, why would everyone say, like, oh, that's always the way it should be done? Like, we didn't
Well,
have
I won't.
electricity for a long period of time. Why? We just wanted to go back to that. We're going to roll around with rocks and not invent, wheels.
Well, I won't say the company name because I don't want to get in any kind of trouble or whatever. But I was at one company where we had what they called FTEs. It was how many loans you had to do for every full-time employee that you had. And anytime a new rule would come out, this bank was like, "Well, we have to follow this rule." And I was like, "Well, we have a 30-day decision rule too, but like we got loans sitting around here for 120 days that nobody's looked at." So I was
Yeah.
like, "You're just picking and choosing the rules." And when I'd really try to get to the bottom line of, well, who came up with this loan per full-time employee? Because, before they used to, you just sign your name to a loan app, and if you got an accept through DU, you didn't have to collect any documents. Now every loan is a full doc loan, and you expect to be able to do this with the same amount of employees.
Right.
So I did a whole 21-page deck called Staffing for More Profit. And I could never find anybody that could make the decision to hire more people than what they were allotted per what they thought you should have. But they could also never tell me who came up with that loan per employee either.
The road to nowhere, just an endless circle.
Nowhere. Or I would call it a circle. You would go all the way to the top, and that person would be like, I don't know. And then you'd start down at the bottom to try to get an answer to something, and you just keep spinning around.
Ugh. Oh, yeah, yeah. As we wrap up here, we talked about kind of the past and what you've seen and what's been different. Where do you see the future of mortgage banking? Where do you look at what your son will be doing in 5, 10 years, maybe when you're not producing anymore or no longer in the business?
It's an interesting one. I bought a lot of this one stock because I listened to one of the CEOs talk about through AI all the information that they could do so fast and what it could do. Um, and I do think we are going to move a little bit more towards fully automated in some
Hmm.
ways. Um, but in our industry, people have been telling me, back in the 90s, people were telling me technology was going to change it. And I still think in our industry, people want to talk to somebody. You
Sure.
know, they want somebody to consult with them, right? Like I could do TurboTax, but I still send my taxes to my accountant, right? And I want
Right.
to sit down with them and go over them. And so I always think there's going to be enough people that want that specialty, like, hey, am I making the right decision? Did I really come up with a budget? Did I really do this? Can I afford this house? People want that.
Right.
So I think technology will continue to get better. I
Sure.
think agencies like FHA and VA will be slow to adopt new technologies. I think non-QMs and things like that are going to become a higher percentage of the business. Because I think as Fannie Mae and Freddie Mac shrink their buckets, more stuff's going to fall into that because there's more and more self-employed people every day. Um, so I don't know if it'll be the same job that we do, but I do think
Sure.
at least in the next 10, 15 years, I still see a need for loan officers. And I don't really think that's going to go away as fast as some people perceive it to.
I just use like crypto and Bitcoin as an example, right? FHFA the other day was like a month ago puts out, FHA approved the use of crypto. Like, but where's the follow up really been? Like, you get like a tweet or you get like an announcement, but then there's no like real implementation. So I got borrowers sending me this like, oh great, I can use my fart coin and I can start buying a. It's like, no, dude, I don't know. Like DU and LP hasn't been updated yet. There's no real guidance from investors. So it's going to take forever for this stuff to roll out. So then you talk about VA, you talk about, FHA. Like, these are things that I think are going to take a while. Better.com, I guess, put out that they can decision a loan in 4 seconds or whatever it was, 40 seconds. Great, but like, are the agencies going to accept fully automated loans like tomorrow?
Well, the problem with that becomes, and it's always been in our industry, is sure, like we have our online application set up where it can do a soft pull of the credit report right up front, and
Hmm.
and you can even run DU and LP up front before it is
Sure.
ever seen by anybody, but it still goes to it's only the information that the people are putting in, right? And I think I have some of the best clients in the world, but very rarely do I ever get anybody that fills out an application 100% accurately, right?
Yeah.
So there's always stuff there. And if you're going to go with that philosophy, you're going to have a lot of loans that fall through the cracks, right? Because the
Sure.
people put their yearly income instead of monthly. That's dramatically going to change something, right?
Yeah.
Or they put in, I just had this the other day where they put in their parents' bank statement because they were a trustee on their parents' account. And I'm like, still not your money, right?
No.
So again, there's just different things that, of course, if somebody went through the application and filled it out perfectly, we have the technology right now where the systems can all decision a loan before it ever gets to anybody. But that rarely ever happens.
Yeah. I
Very
mean,
rarely.
your outputs are only good as your inputs. So unless someone's checking it and verifying all this, and
Yeah.
also there's some nuanced questions to what we do, right? Like,
Yes.
do these AI bots want to get into the divorce decree and all these questions? And there's a lot of things, just how the structure of your payment, this and that. So I'm with you. I think technology is going to change things, but I liken it a lot to like the internet revolution, where you won't be doing the trifold paper anymore or the three pull apart papers anymore, but you'll just be using your computer versus having everyone sign pen and paper, right? So change is definitely coming, but I think those that adapt and lean in will see their business grow and will capture more and more of it.
Yeah, I had a client the one time that was funny story. So they called me and basically they just wanted me to write the approval letter,
Okay.
right? And basically with not giving me any information. And I was like, well, like I can take some stuff over the phone and let you know if you qualify, but I don't really feel comfortable writing this approval letter because that's my name on the line too. And as we started talking more, they were like, well, do you have a doctor program? And I was like, well, yeah, I do. I was like, and I said, why? Are you a doctor? And they're like, yes. And I was like, oh, okay. I was like, well, can you do me a favor? Can you write me a prescription? And they're like, what? And I was like, well, write me a prescription. Oh,
Yeah.
you won't because you haven't seen me or evaluated me or done anything. But I was like, that's exactly what you're asking me to do. And
Hopefully that registered.
it definitely registered. They filled out the application.
All
Um,
right. See,
but yeah, you have to work with people that also respect what you do, and that you're going to bring value to them. And
that's a
that's an important
discussion.
part of it.
I talk to our team all the time. It's like, look, we want to become available. We want to help clients as much as we can. But at some point, if you're too available, there's no, them respecting your time or any of this stuff, you become a commodity in another way, right? If you put up some boundaries, if you show the sense of like, listen, I want to help you as much as I can, but like there is a time and a place for everything, then clients respect that too. Like, you don't just call your doctor and expect them to answer the phone 24/7.
Exactly. Yeah, no, for sure. And if you want the best, sometimes you have to wait for them. And most of my referral partners, especially when it was really busy, were really good at saying, hey, he's going to be a little bit hard to get a hold of. But when you get a hold of him, it's worth it.
Right.
And setting the expectation that they're not just sitting there waiting to answer the phone.
Do you
Um,
want the best or the most available? Right? They're not
Correct.
always the same.
And I've always thought it's rude to be on the phone with somebody or be in a consultation or on a Zoom call and then just take a bunch of other calls during it, right? Like that person should have your full attention for that period of time. And then, so I don't make anybody wait very long, but
Sure.
most of the time, I mean, what I spend probably 7.5, 8 hours a day on the phone.
Right.
So the odds of you getting me at the first try is very, very slim. But very rarely will you go more than 15 or 20 minutes before I return somebody's phone call.
I would rather wait and have someone's undivided attention than having someone distracted when I'm talking to them.
It's funny, a bunch of years ago, I did a speech at an MBA event in DC, and it was me and the guy who was number one at Countrywide was on the panel, and he basically said that every single call, when somebody called him, he answered the phone. It was either him or an assistant or somebody else would always answer the phone. And when it came to me, I was like, huh. I was like, well, almost everybody that I calls me goes into voicemail. And I said, the reason is because by the time I call them back, and it's usually very fast, I know who it is, what they want. I can pull up their old loan. If I had
Hmm.
it, I could see it. They're going to say, do you remember me? And I'm like, yeah, I remember you. You bought here and whatever. It's only because I just looked at it, right?
Yeah.
But I go into that call prepared, right? And that saves an amazing amount of time as opposed to somebody that goes, hey, it's Bob. And you spend the next 30 minutes on the phone with them trying to figure out which Bob you're talking to.
Right. Yeah.
Yeah,
No, efficiency is key there.
it is. Yep. And everybody does it their own way, right? So I'm sure that assistant might was asking who it is and she could look it all up before she put it over to him. But as long as you call people back in a timely manner, yeah, they're always happy with that.
Listen, if you can do that and close 2,000 loans, I think you're okay.
Not anymore.
Yeah. Well, Darren, I really appreciate your time today. This has been great. Any parting thoughts or anything you want to say to our guests here?
No, I've watched a couple of your stuff, so you do an amazing job. So congratulations.
I appreciate it, man.
Next, you get your
Thank,
own podcast.
I don't know about that. I'm no Joe Rogan. All
Yep.
right,
There
man.
you
Well, it
go.
was good catching up. We'll have to grab a beer at some point soon.
All right, you too, buddy. Thanks a lot.
All
All
right.
right.
See ya.
Bye.